How does money work? Where does it come from? And why is it so essential in our everyday lives? Stick around to find out everything you need to know about how money works. This is Wealthlocity. Here you create, protect, and grow your wealth fast. Let's start with the origins of money. Before money existed, people relied on bartering to exchange goods and services. This system had its limitations, mainly because it required a double coincidence of wants. This means that both parties had to want what the other was offering. To solve this, early civilizations began using commodities like grains, shells, and livestock as a medium of exchange. Over time, these were replaced by metals like gold and silver, leading to the creation of coins and, eventually, paper money. Currency has evolved significantly over the centuries. From metal coins to paper money, and now to digital currencies, each form has aimed to make transactions more efficient and secure. The invention of paper money in China around the 7th century was a significant milestone. It was lighter and easier to transport than metal coins. Fast forward to today, we have digital currencies like Bitcoin, which represent the latest evolution in the way we use money. So, what exactly is money? Money serves three main functions. It's a medium of exchange, a unit of account, and a store of value. As a medium of exchange, it facilitates transactions by eliminating the need for a barter system. As a unit of account, it provides a standard measure of value, making it easier to compare prices. Finally, as a store of value, it allows people to save and transfer wealth over time. This means you can save money now and use it in the future to buy goods and services. However, it's important to note that money itself has no intrinsic value. It only works because we all believe in its value and accept it as a medium of exchange. But where does money come from? In most countries, central banks are responsible for issuing currency. They control the money supply through monetary policy, which involves adjusting interest rates and conducting open market operations. Additionally, money is created through the banking system via fractional reserve banking. When banks lend out a portion of deposits, they essentially create new money, expanding the money supply. Banks play a crucial role in the economy. They provide a safe place for people to deposit their money and earn interest. Banks also lend money to individuals and businesses, charging interest on these loans. This lending activity helps fuel economic growth by enabling consumers to spend and businesses to invest. In return, banks make a profit from the interest rate spread between deposits and loans. The Federal Reserve System, or the Fed, is the central bank of the United States. It regulates the banking system, controls the money supply, and aims to provide a stable and secure financial system. Now let's talk about how banks can create money out of nothing. This process is known as fractional reserve banking. When you deposit money in a bank, the bank is required to keep only a fraction of the deposit as reserves, say 10%. The remaining 90% can be loaned out. For example, if you deposit $1,000, the bank can lend out $900 to someone else. This $900, when deposited by the borrower, can be further lent out, creating more money in the economy. This cycle continues, effectively multiplying the initial deposit. This process is regulated by the central bank to ensure stability in the financial system. Interest rates and inflation are two key factors that influence how money works. Interest rates, set by central banks, determine the cost of borrowing money. Lower interest rates make borrowing cheaper, encouraging spending and investment. Higher rates do the opposite, helping to control inflation. Inflation, on the other hand, is the rate at which the general level of prices for goods and services rises. When inflation is high, the purchasing power of money decreases, meaning you need more money to buy the same things. Inflation can happen for various reasons, such as increased production costs, higher demand for goods and services, or excessive money supply in the economy. The stock market is another critical aspect of how money works. It's a place where investors buy and sell shares of companies. The stock market helps companies raise capital to grow their businesses while providing investors with opportunities to earn returns on their investments. Understanding the stock market and how to invest wisely can significantly impact your financial future. Diversifying your investments and staying informed about market trends can help you make better investment decisions. Governments also play a vital role in the economy. Through fiscal policy, they can influence the economy by adjusting spending levels and tax rates. During economic downturns, governments might increase spending or cut taxes to stimulate growth. Conversely, during booms, they might reduce spending or increase taxes to cool down the economy. Balancing these policies helps maintain economic stability. Additionally, government regulations and policies can impact industries, consumer behavior, and overall economic health. Money isn't confined to national borders. It operates within a global economy. International trade allows countries to exchange goods and services, benefiting from each other's strengths. Currency exchange rates play a crucial role here, affecting how much one currency is worth in terms of another. Factors like interest rates, inflation, and economic stability influence these rates, impacting global trade and investments. Understanding global economic trends can help you make informed decisions about investments and business opportunities. Prices for goods and services are primarily determined by the forces of supply and demand. When demand for a product increases and supply remains constant, prices tend to rise. Conversely, if supply increases and demand remains unchanged, prices tend to fall. For example, during a holiday season, the demand for certain products like toys and electronics increases, often driving prices up. On the other hand, if a company produces a surplus of a product that isn't in high demand, they may reduce prices to sell off excess inventory. Understanding these dynamics can help you make better purchasing and investment decisions. On a personal level, understanding how money works is essential for financial well-being. Managing your finances involves budgeting, saving, investing, and planning for the future. Creating a budget helps track your income and expenses, ensuring you live within your means. Saving and investing wisely helps grow your wealth over time, preparing you for emergencies and retirement. It's also important to manage debt responsibly and build a solid financial foundation. Remember, keeping a large portion of your money in cash can be risky due to inflation. Investing your money can help protect its value and grow your wealth over time. The future of money is evolving rapidly. With advancements in technology, we're moving towards a more digital and cashless society. Cryptocurrencies like Bitcoin and Ethereum are gaining popularity, offering decentralized alternatives to traditional currencies. Financial technology, or fintech, is revolutionizing how we bank, invest, and manage money, making financial services more accessible and efficient. Innovations like blockchain technology, mobile payments, and digital wallets are shaping the future of money. However, the shift towards a cashless society and the introduction of central bank digital currencies, or CBDCs, also come with risks. For instance, abolishing cash could lead to increased government control over personal finances and loss of privacy. While the convenience of digital transactions and CBDCs is undeniable, there are significant risks to consider. Abolishing cash could lead to increased government control over your financial activities. With all transactions being digital, governments could potentially track every purchase you make. This raises concerns about privacy and the freedom to use your money without undue oversight. Additionally, in times of economic or political instability, having physical cash can provide a sense of security that digital money cannot. Many misconceptions surround money. Some people believe that you need a lot of money to start investing or that debt is always bad. However, you can start investing with small amounts, and not all debt is harmful. Loans for education or homeownership can be beneficial if managed wisely. Understanding these misconceptions can help you make more informed financial decisions. Educating yourself about money can empower you to take control of your financial future. Technology plays a significant role in money management today. Mobile banking apps, online investment platforms, and budgeting tools make it easier to manage your finances. These tools provide real-time insights into your financial health, help you set goals, and automate savings and investments, making financial management more accessible and efficient. Embracing technology can simplify your financial life and help you stay organized. Financial education is crucial in today's world. Understanding how money works, from basic concepts to complex financial instruments, empowers you to make better financial decisions. Resources like books, online courses, and financial advisors can provide valuable knowledge and skills to help you achieve financial success. Continuous learning and staying informed about financial trends can enhance your financial literacy and decision-making abilities. We put a few links in the description for further reading about money and wealth building. Understanding how money works is essential for navigating the modern world. From its origins and creation to managing personal finances and investing for the future, money plays a crucial role in our lives. By educating yourself about money, you can make informed decisions that lead to financial stability and success. Remember, money itself has no intrinsic value. It only works because we all believe in it. Also, with the end of the gold standard, there's no longer a direct tie between money and gold. This makes understanding and managing money even more critical in today's economy. And while digital advancements bring convenience, it's crucial to be aware of the potential risks, such as increased government control with the rise of CBDCs. Thank you for watching. If you found this video helpful, please like, comment, and subscribe for more content on personal finance and economics. Share your thoughts and questions about how money works in the comments below. See you next time with more money in your pocket.